We have with us today a experienced private money club member. Steve's been with us since last year when we kind of first started launching private money club and bringing lenders into it and whatnot. So Steve Lawson out of Indiana. How are you, Steve?
I'm doing just fine. How you doing?
I'm good, thanks. But Steve, for anybody that's new on here, new to the private money club, we've had a bunch of lenders coming in recently looking for deals. And I love the way that you set things up. I know you got a bunch of new stuff to talk about today. So just maybe a background real fast for anybody that's new on here, and then kind of what's been going on over the last year. And then we'll talk about what you have going on.
Yeah. Oh, thanks for that, Ruth. So yeah, I've worked with about 6 of your money club members so far, and I'd love to say everything is perfect. For the most part, it's gone pretty well. I've been doing this for 20 years, real estate investing. I've done over 100 flips. I've got a portfolio of several different properties, and or in several different cities. But the one of the things I wanted to share is just as you think about who you're lending to. You talk about experience, and it came into play. I've done a couple loans with Gene. He's been great. Like I said, not everything goes perfectly. We had a fire halfway through construction, and did a bunch of damage. And someone else may have panicked or may have not been properly prepared. But because I've done this enough times, I had it insured. I had it insured properly. We filed the claim. They came back with a $22,000 settlement. And I said, nope, not going to take it. And so we went through their 28-page line-by-line settlement and went back and corrected them. And they apologized. Oops, gosh, I guess we missed this. It was a 5-unit building. They only looked at 3 units. And they missed the one that had the fire, most of the fire damage. I mean, just little errors like that. They included material costs, but they forgot to include labor costs. So we went and corrected them, went back, ended up with almost $60,000 in damage from the fire from them. And then we resumed construction. That should actually be done this week. And we have 3 investors already interested in it. So, it's one of those where, because we've done this before, like I said, I didn't panic, had everything in place. So even when stuff goes wrong, it means Gene's still, making, double-digit returns on his money, secured by real estate.
Right. Yeah, we'll talk a little bit about that, how you do the returns and whatnot. So that's a great example though, Steve. I'm glad you brought that up. I wasn't even aware that happened. But if you guys have been watching now for a while, we talk, if you're in the private money club, one of the kind of rules that you want to follow is always make sure that the contract, the mortgage, the promissory note is done properly. And one of the items in there that you always want to have is, that insurance, make sure that property is insured, that the borrower, that the investor is putting money into for a flip. So the fact, Steve, that you had that insured like that, that diverted disaster, it sounds like.
Yeah. So and again, most of them go as planned, but every now and then there's a delay here. I mean, I will say in the last 90 days, we've had more permit delays than anything. We've actually had contractors, but just, we had a couple properties that sat there waiting for permits for 60 days. From the city that was delayed or code enforcement or something. But, other than that, things have been going really well. And I think most of your investors are pretty happy.
Yeah. Yeah, absolutely. I'm just looking at the comments over here. Steve is wonderful to work with. Steve Lawson and his team are awesome to work with. Steve is great. So yeah, you definitely have a few of your lenders on here right now, Steve. So that's great to see. And thanks, Colleen, Claire, and Ruth for commenting in there. That's what it's all about. And that's what we do with the private money club on the borrower side. I mean, Steve, you came recommended to us from another person in our network, Steve Richards, who runs CEO Nation and is a big investor in his own right. And I know you guys had known each other, and that's kind of, I believe, how we were introduced originally.
Yeah,
and
that's right.
Yeah, now you're working with all the lenders that have been in the club since kind of some of our founding members, and things are going great. So we talk a lot about this, building that relationship and growing. So tell us a little bit more though, Steve. I know you've been doing this for 20 years, but tell us a little bit more about what your wheelhouse is right now. What kind of deals you're working on, what that looks like, what you got going on.
Yeah, so I'll share several opportunities in a minute, but I want to put you in the spot for a second and get your opinion on something. long-term investing versus short-term from a lender standpoint. And the reason I say that is I know a lot of the loans out there are, 4, 5, 6 months. People say, oh, I want to loan it out, but I want to get it back real quick. And that's why they're doing the hard money loans so they can loan it and get that money back in 4, 5, 6 months. And in my head, I'm looking ahead going, well, that's fine now, but if you loan that out and to me today and get it back in 6 months, is there going to be more flipping? Are you going to have another opportunity to follow that one? I know some people have money that's just sitting there trying to find an opportunity. Whereas one of the things I'm going to talk about today is I've got several longer term things where, hey, here's a 4-year, loan, or even up to 7 years where you're just going to be getting interest only all the time, or we can do amortized. And so there's some other opportunities. And so I just wanted to get your opinion of short-term loans versus long-term loans for your lenders.
Yeah, no, it's great, Steve. And we've had some other borrowers on the Money Club here recently. Dwight Harrison, for instance, just came out with I think it's 5 or 6 year long-term amortized loan that he's doing right now on some of his rental properties. And we were talking about those. And so I think it's great you're doing that, Steve. I didn't realize that that's what you had going on right now, but so let's definitely talk more about that. But in my opinion, you're absolutely right, because if let's say you do a short-term 12% annual loan, right? But you get your money back in, let's say, 3 months. So you lend it out, it accumulates at 12% annual, which is 1% a month for 3 months. And then you get your money back. But let's say it takes another month to find and implement and close on that next deal. So now you have a month where your money's not growing. So even though you got 12%, let's say you do that 3 times throughout the year, you really only earn 9% on your money throughout that year, right? Now, the good news with that is you're putting your money out and you're getting it back very quickly. So if you're looking to just grow your money while you're maybe waiting for future opportunities where you yourself can go purchase property, something like that, that's fine. But true private money, passive income is generated through putting your money somewhere and forgetting about it, having no work involved every few months or every 3, 4, 5, 6 months or something like that. So if you have something, Steve, where somebody can put their money and just forget about it for 4, 5, 6, 7 years, and you know that the money's coming in, and whether that's interest owner only or amortized, we can talk about the difference in that as well and what might be more beneficial. But I think it's a great idea. And, even looking at the long-term aspect of the market right now, a lot of times we're saying get in, get out, get paid, and move on to the next deal. So you don't, quote unquote, get stuck holding the bag. But if it's the right type of asset class, the right type of real estate, affordable housing, things like that, even if the market changes, stuff like that's still going to hold its value. And when you look at the rents coming in on long term, are those rents going to be able to hold up, or do you have room in there where even if they come down a little bit, you're still okay? So those are the things you want to look at long term. But otherwise, it's great. And especially right now, a lot of people using self-directed IRAs. That's long-term money anyways. So stick the money from the self-directed into there and forget about it for 5, 6, 7 years. So maybe a long-winded response there, Steve, but
no, that's exactly what, yeah, no, that's great. Exactly what I was hoping your lenders would be able to hear, kind of different ways of looking at it. And the reason I say that is I get a lot of people who say, oh, I'd like my money back in 3, 4 months. Well, that's great. Then what are you going to do? You sit there for a month or two while you're trying to find the next deal, and then you just keep working every 3, 4 months to find that next loan. Whereas, if, like you said, set it and forget it. And so with that said, I'll kind of go into, I got 3 or 4 different groups of opportunities. I think I added them all up. I forgot, I think I've got 13 or 14 different properties that I'm looking for loans on.
Oh, wow. Okay.
Yeah. Now, one of them that's ready right now, traditional fix and flip. And so that would be a 6-month short-term. It's 140,000 total, 75,000 for the purchase, 65 for the rehab, and that one's ready to go. Again, more of a traditional fix and flip. We're looking to pay 10% interest on that. If we need to, we'll go to 12%, but looking to pay 10% on that one. And again, 6-ish month return on that one. We're evaluating 2 or 3 other flips that we could get in the next 30 days, but that's the one that is ready to go right now. So that's one. What other information would you like on that one?
Well, let's ask, what kind of questions? So any lenders that are on here right now, if you're looking to move 140,000, what questions would you have? Or even if you're not in a position right now, if you're just kind of learning, like what questions would you ask? If Steve says, hey, I got a deal right now, it's worth, I need $140,000 for all of it. Like what questions would you ask? I could ask the questions, but what questions would all of you ask on here? Let's see if you're following, or if you don't know, ask that question. Okay, so what market is it in, Steve?
Oh, good question. These are all in the Indianapolis or within an hour. We do quite a bit in Anderson, Indiana, which is about 20 minutes up the road. And then we do some in Muncie, Indiana, which is about 45 minutes to an hour up the road.
Okay, what's the ARV on the property? So ARVs, everybody knows, is after repair or after rehab value. So after they purchase it, put all the work into it, and then go to sell it retail once it's complete.
Yeah, we conservative numbers between 2 and 210. There was a very similar property just a block over that sold for 237. I think I would love to get that, but there were multiple properties in the 210,000 range.
Okay. So the way he comes up with that is we look at what are called comps, or comparable market properties. So comparable market analysis, CMA, BPO, banks call it a broker price opinion. But all this does is it looks at other properties. Like if this is, what is it, a 3-1 or a 3-2?
3-2.
So what that means is 3 bedrooms, 2 baths. So 3 bed, 2 bath. So when you look at comps, you're looking at other areas in that same market, in similar neighborhoods that are 3-2s that have sold recently. What do those sell for? And that's how you come up with what the ARV is.
Right. And the reason that I was being conservative, we do have a 2-car garage, and several of the comps did not. And so I'm hoping that is what will put us well above that 200 range. So
yeah, absolutely. Okay, so somebody is also asking, is there a minimum investment? So Greg, you might be thinking more like a fund where, hey, they're raising $2 million and you need a minimum of 50,000 to get into that. On this deal, the 140,000 is what's needed to complete the closing of the property, the work needed to get that thing for sale for 200. So in this case, Steve would probably be looking at one investor to come in with the whole 140,000. Now, he could combine 2 people, like 70 and 70, but typically speaking on these deals, it's just gonna be one person coming in with the total amount, right, Steve?
That is correct, but I will tell you some of the things I've come up are much smaller amounts. So nothing smaller, and this is 140, but the next few, there's some some smaller opportunities.
Okay, cool. So yeah, so in this case, this deal that he has 140, but he said he has like 10 or 15 different deals. So this is just one of them that we're just mentioning first. So just a couple other questions on this, Steve, real fast. Is it a single family?
It is single family. Yes.
Okay, 3 bedroom, 2 bath. And then what year is the construction?
It is an older house, 1920. It is just south of downtown Indianapolis. If you've looked in the market here, there's an area called Bates Hendricks. If you ever watch, was it 2 Women and a Hammer, I think it is, on HGTV. I think that's the name of their show, but basically,
okay.
I think that's the name of their show, but basically it's on HGTV. It's a fix and flip show, and that's the neighborhood.
Hammer.
Yeah, that's what it is. Thank you. But that's the neighborhood where they do all their flips. So.
Okay. Wow, very cool.
Yeah.
Look at that. All right, so I was saying, if I were to say yes, then how much would it take, as in time, from the time of the first conversion to the time you have the money to lend in your hands or the custodian's hands? Do you understand that question?
It sounds like they're just time frame. So we're looking to close in 2 to 3 weeks. And so depending on where the money is, I mean, if you've got a custodian, it takes 2 or 3 business days for them to get it to the title company. But again, we're still, a week or 2 away from that anyway. So it would just be a matter of, getting the money from your custodian to the title company. As far as the rehab, it is going to be, it's a little bit bigger. That's about a 2 to 3 month rehab. And so it should be hitting the market, right as the perfect time of year. I mean, we're hitting it right in May and June. And so there's usually a very strong market at that time. So hopefully we find a buyer quickly. So time frame, hopefully you're done in sometime by July.
Okay. And speaking of the rehab, Steve, just I know you have a couple teams, I believe, right? But talk a little bit about, who works with you, what kind of construction guys you got and stuff like that.
Yeah, we actually have 5 crews right now. And I've got a rehab manager who is very busy. And he runs around, keep an eye on everything. And we do, and of those crews, we only have 1 or 2 that do the fix and flips. A lot of them do more the rental grade rehabs. And so it's important to understand the difference. So on a property like this is going to be a nice fix and flip. It just requires a little bit better finishes, better attention to detail. And so we make sure we put one of the more skilled crews on a fix and flip.
Yeah. And that's, somebody watching, that's very important. We talked about it a little bit on the MSTV coaching call last week with Jack Petrick was on. And, if you listen to Jack, what he was saying, how their partners and the builders that they use for these new construction deals here in Florida, the builders they're partnered with do thousands of homes a year. So they have, access to material, they have access to supplies, and they don't run into the issues because they're buying in such bulk. They get priority with stuff like that. So, what Steve's saying, where he has 5 different crews available, where if, hey, your crew all of a sudden they don't show up one day or they disappear, something like that, like he has replacements, he has backups, he has other teams that are available. So business doesn't come to a halt. And when you do a lot of properties, you do a lot of deals, you've been doing it for 20 years, like Steve has, and hundreds of flips, that stuff all builds into, hey, is this somebody that I want to lend to? Remember, we always talk about the deal, the person you're lending to that's actually doing the work on these deals is just as important in my eyes as the deal itself. And those things both need to be looked at when you're deciding if you want to lend your money. So I appreciate you bringing that up, Steve. And it's good to know that you do have those people in place.
Yeah. Yeah.
It would be a first lien position, right?
That is correct.
Okay. So first lien position just simply means that you, just like if I was to go get a mortgage on a home that I'm buying to live in, the bank would be in a first lien position, meaning if I don't make my mortgage payments, the bank can foreclose and take that home away from me. Same thing in this deal. If you lend the money on this deal to Steve, not to Steve, but to Steve's company to do this flip, and Steve's company or Steve does not pay you the terms, the 10% interest that they're going to be paying you, or return the principal, then in first lien position, you can foreclose and take that property back. So that's what that means.
Correct.
Average days on market for sales in that area? It's a good question.
They're between 30 and 45. And keep in mind, a lot of the properties are bought with a loan. So what usually happens is they go on the market, they sell in 3 days, and the other 30 days is waiting for the lender and the appraiser.
Right. Yeah. Yeah. Get the inspectors and appraisers that can take a little time.
Oh, right now they're killing me. Yeah. Yeah.
So 30 to 45 day average on market is quick. Because like you're saying, it takes about that long just to get to a closing, meaning the things are going under contract very fast. Mm-hmm. So it's a great market you're in up there.
Yeah.
All right. So great questions everybody's asking. I don't see any more. Here's one in the Q&A. Let me just see. Yes, first lien position, Jill. Great question. All right. And Steve, do you have more info on this, like pictures or any, like the comps and things you could send to people if they wanted, or what?
Oh, absolutely. Like? Absolutely. Yeah. We've got our full due diligence. And again, it's exactly what you're talking about. The pictures, the comps of the other properties that sold, and the rehab budget. Those are the big ones. But yeah, we have all that.
Yeah, like the perfect loan proposal.
Correct.
Yep. Okay, cool. So if anybody wants more info on this deal right here, what you'll do is you'll reach out to Steve and he can send it all directly over to you. You guys can hop on the call and talk about the details, right? Steve,
right.
Sound good?
Yeah, and that'll be kind of the same thing with most of the rest of these. What I was looking to do today is just kind of just mention a bunch of these. Whoever's interested, okay. reach out. And the few we're going to talk about, we don't have. Let's just say I'm flexible. There's certain ways I'd like to do them, but if I've got a lender who's interested and I want something for a 4-year and they want to do a 3-year or 5-year. I can be flexible on some of these, but I'll give you in general. Here's what I'm looking for. So for the next 5, I actually have I actually need 10,000 per property on 5 different properties, and my preference was to do it amortized over 4 years. So, for example, if you loan 10,000. I think the monthly payment is at 9% interest was $248 a month, and just you'd get $248 a month for the next 4 years. And so I've got 5 of those at just 10,000 each. So if you wanted to do 1 or 2 or 3 or more of those, that's fine. But that's a good opportunity for someone who has a smaller amount. So there's, like I said, go ahead.
Yeah, let's talk about those. So okay. What are they investing in for $10,000?
Basically, believe it or not, these are properties that I was able to get with less than 10,000 down or 10,000 price. And I have buyers that are buying them as is with seller finance. And so, yeah, basically that's it. I've already bought 3 of them. Just trying to kind of replace the funds,
right.
But they're
single family, or are they like little?
Oh yeah, single family. They're just, I hate to say it, they're small, crappy houses, but there are people, and they need. And most of them, they're livable, but they're hideously ugly. I'll be honest. They're $10,000 houses, but I've got people in a couple of those towns that are, we've already done credit checks and they're buying them from me. They can't afford 10,000, but they can afford, $300-400 a month for the next 10 years. And so, my plan is to have all these obviously paid off within 4 years. And then, after that, I'm just continuing to collect. Basically, I'm just the bank in years, 5 through 10 or 5 through 15. Does that make sense?
Yeah, no, definitely. So you're not fixing these up at all. They're just kind of
Nope.
as is.
Yep.
Okay. So giving people an option to purchase as opposed to just renting.
Correct.
Yeah, they can fix it up if they want to. Yeah, no, that's good. Are these in the same area up in Indianapolis area?
Yeah, these are actually mostly in Muncie, Indiana. So mostly in Muncie. One is in Kokomo. One is in Marion. So just those are all cities of about 50 to 70,000 that are within an hour or so of Indy.
Okay.
Muncie is where the home of Ball State. I got like 24,000 students there. Decent sized little city.
Okay.
So that's that group.
So you have 5 of those, and then these would be first lien position too then.
That is correct.
Mm-hmm. Yeah, Cindy was saying, I think there's going to be a huge market for these, for better or worse, crappy little houses going forward. And
yeah,
we're being priced out of. A lot of families are being priced out of the market right now. It's pretty wild. And it's relative to where you are. Right? Because a $200,000 home here in South Florida is now $400,000. These probably, who knows what $10,000 houses were prior, but it's all relative to the area, right?
Yeah. Well, and like I say, what I'm doing, and keep in mind, that's just what I got this month, or is those 5. I'm looking at others, and I may continue doing that for a while. Where if I can get the property for 10,000 or less, just keep doing that. And again, my model, I'm selling them for twice that plus interest. So, but again, there's people that are pretty thrilled they can go buy a house for $300 a month and fix it up themselves, because again, they can't afford anything. The rest of the houses on the market are 70 or 80,000 or above.
Right. Okay, so this is 6 months. Those are going to be 4 years. So that's somebody has a Roth IRA or an IRA that didn't, an old 401k that didn't have a whole lot of money into it, but you're looking to, get it out of the markets and self-directed or something like that. Things like these are excellent for that, in my opinion, because you're lending the money. It's long-term, it's 4 years. So you can't touch the money in the retirement account anyways. So it's all coming back, and it's a smaller amount. So, because a lot of times when you have the self-directed IRAs, it's like, well, if you don't have $140,000 to lend out on a full deal, what can you really do with it? Or even 50,000 to get it into a private fund or something like that. So having like the 10,000 option right here, to me is awesome, Steve. And right around that 9% mark is great for long-term,
Right, right. Well, if you like that, then you're going to love the next 7 or 8.
Okay.
And basically, they're just what I'm looking for are interest-only loans, preferably for up to 7 years. And I'll tell you why in a minute. But I've got these properties. The lowest one is 40,000 that I need. One is 45. One is 50. 2 are 65,000. One is 80. One is 90. So there's a range from 40 up to 90. Different price points there. And my goal is to find people that are willing to loan with interest only. I can send you the money monthly, quarterly, however you prefer. I thought about that could be a way to fund a infinite bank. And if you're looking at 7 years of payments coming in consistently, that's a thought there. But and the reason I picked 7 years, because in years 3, 4, 5, and 6, I will have 2 in college. And so I'm trying to postpone any balloon payments until after that. At least as many as possible.
I hear you.
Yeah.
Okay. So what are these deals? Are you seller financing these, or what are these? What do you got going on here?
No, good point. These are actually, I'm holding all of these in my own portfolio. These are all rental properties that I will own for the long term.
Okay. So you already own these.
4 of them I already own, and 3 of them I'm in the process of acquiring in the next couple of weeks. Yeah, and the 4 that I already own, I mean, they're already rehabbed, and a couple of them are already cash flowing.
Okay. And what interest are you looking to pay on these ones?
The goal on those was to get 9%.
Okay. All right. So a nice long-term 7-year, 9%. Now tell me this, Steve, if let's say somebody was to get involved, they're lending to you, and in 3 or 4 years from now, they need to cash out or something like that, what would their options be? Like, can they sell that to assign that note to another investor, or what's that look like?
Absolutely. Yeah. So you'd have a couple options. Again, you could always assign it to another investor. And the other one to be, let me know. Again, I work with a lot of lenders, obviously. And, I get, depending on the timing, I may be able to just pay it off myself. Maybe I know another lender that would want to take over your position. Or, heck, depending on the timing of it, if I need to, I could just sell the house and pay it off, that way. So there'd be multiple options. Again, they're not, depending on what they are, some of them could be pretty quick. Finding another investor, I mean, that could be done in a matter of 30 days or so, and just to sign it over and be done. If I needed to sell the house, obviously that could take a little bit longer, but there'd be multiple ways. If for some reason you did need the money, like I said, in year 3, 4, 5, that we'd be able to get you out of that payment plan. So again, you're not handcuffed in there, but it's just my goal. And I know that I will have some balloon payments while my kids are in college. That's quite all right, but I'm just trying to get as many as I can paid off before then, or balloon payment after then.
Right.
So.
Okay. All right. So you have 7 of these babies you're looking to finance long term.
Correct.
Yeah. 9% long term is great too.
Yeah.
So a couple of questions coming in.
Yes, sir.
When finished with the current flip, do you like to keep the capital and roll it into your next project for the lender?
I mean, like with the same lender, moving on. Basically, if the question is, do I give the current lender kind of a first choice to move into the next one? The answer is yes. So the 6 people I've worked with, as a matter of fact, I already reached out to all of them, 2 days ago to let them know that this call was coming, because I want to give them first choice. They've invested with me before. They've been great. If they want to roll that money over into my next investment, absolutely. So I think that's what he was asking. In which case, yeah, that's exactly what I would try and do. Yes.
Okay. Yeah, no, that's perfect. And, it's all about that, relationship again, just,
Mhm.
keep it rolling. If all both parties are happy, keep it rolling. So, all right, this is from Francis in Indiana. Do we need a legal representative to do the loan disbursement for closing, or does the title company do that for both parties, the lender and purchaser?
Indiana, it is title. And so, yeah, everything is done through a title company. They hold the money, they hold the title to the property, they hold the mortgage. They make sure all the I's are dotted and T's are crossed, liens are clear, everything's done before the transaction gets completed.
All right, perfect. And Claudia was just asking where they're located. She hopped on late. These are all in the state of Indiana, in and around Indianapolis.
Correct. And I saw a request there. One thing I was going to give you is my contact info.
Uh-huh.
So I don't know if you just prefer the email address.
Yeah, let me type it in the comment box for everybody. Let me just pull it up real fast.
Okay, sure.
So just so everybody knows, Steve is in the Private Money Club, so you guys can contact him either on Slack or in the Private Money Club, but it might be easiest just to shoot him an email. Or what's the easiest for you, Steve? Your email?
Yeah, probably email. I can tell you, I've actually got booked calls for the next 3 hours today, so I won't be able to take any calls, but this evening I'll catch up on emails. So,
Right,
so yeah, the email address.
All right, so I just put it in the chat box.
Yep, right there. Thank you.
All right, so just shoot Steve an email or contact him through Private Money Club to get that information. Somebody's asking if this was recorded. It is recorded, and it is put as a private link on the Private Money Club. So you can log into there and catch the recording. The link will be right there under Learning Money Club Monday recordings.
Yeah. And the last thing I'd throw out is, if you heard something that was close to being a fit for you, let me know. It's like, oh, well, gosh, I have 55. I heard him say 50,000 and 60,000, but I've got 55. You know what? Let me know. Let's see what we can figure out. Or if you say, well, I can't go 7 years, but I can go 6 years. I mean, if there's something that's, sound like it might be a close fit, let me know. I can be pretty flexible.
Yeah, I mean, you got a lot of options right now. Everything from a bunch of deals at 10,000 up to 140,000 and everything in between. And three, about 6 months to 4 years to 7 years. So take your pick, right?
Right.
All right, awesome. Any questions on anything that we've gone over so far? Put them in the chat. Sorry about that. I got all my windows and doors open today, and
I'm jealous.
All right, so let's see, Steve. Well, no questions coming in. So, is there anything else you want to, what else you got? It looks like you got a lot going on right now. So, well, I guess my question to you would be, when we talked last, you were doing a lot of these types of deals. Right. It looks like you're kind of moving more towards the longer term seller financing and long-term hold rental properties. So is that a reason you're moving more towards the long-term stuff yourself personally, or what's that look like for you? Yeah,
we're still doing quite a bit of flips. And we just, some of the flips that we're doing, that I've been doing with the first 6 people in your group, they actually funded the next group. And so some of the other flips are already funded by people who are doing their second round or third round with me. Plus it is getting a little bit harder to find some flips. So I'm being a little bit more conservative now than I was. So I'm doing a little bit less and just, really stumbled across a bunch of really good buy and hold opportunities in the last couple of months. And so, the funny thing is I had come to the group since October, November, with I think it was the last time I was looking for funding for anything. So it's been almost 3 months, but then just like I said, in the last 2 to 3 weeks, it just exploded with some great opportunities. So it's kind of whatever the market has available.
Yeah, no, that's awesome. And because you were doing something different prior to getting into the single family flips, right? Do I remember that correctly?
We do a lot of wholesaling. If maybe that's because the 3 businesses I have, one is wholesaling, and I've got a team of acquisitions managers there, full team there. And that's really where I find a lot of the deals. And so that's wholesaling. That's the primary ongoing monthly business. And from that, we find fix and flip opportunities for my flipping business, or we find buy and hold opportunities for my holding company. And so everything ends up in one of those three categories. Either we wholesale it, we flip it, or we hold it.
Yeah, no, that's that brings up another good point too, real fast, which I'll talk about. So what Steve is essentially saying by that, and this is really important when you're looking at a lender, you want to make sure that they understand what their options are. They understand the various sides of the business, because you can go in, you know, somebody that's experienced can go in to a deal and find a way to make money on it, where somebody inexperienced can go into that deal with one track mind and leave money on the table, or just completely botch things because they don't set it up right. And a lot of that boils down to what are called exit strategies, right?
Mm-hmm.
So what Steve's saying is when he goes in, I mean, if it's a deal that, hey, they can make a quick profit on it and move on it and move on to the next one, they'll wholesale the thing. If they hop on, they're like, okay, well, let's make a great flip. Let's put our team in there, fix it up and get that thing sold on the retail market. Or if it's, hey, this is a great area that is going to bring, you know, long-term rents. It's a lot of rentals are in demand right now, or people that want to own homes that just can't afford the down payments. So we can do seller financing. You know, they have the options of doing it as a long-term hold or doing it seller financing deals. And so having these different exit strategies available, it should give you some comfort working with an investor like that understands the you know, how that works, understands the benefits of it, and can put those deals together that way. So stuff like that, Steve, is all clicking off the boxes for me if I'm looking for a new borrower to lend to, you know? Very important. All right. So Lisa, so this is not any kind of, you know, registered SEC fund or anything like that. So, you know, there's no requirements to be an accredited investor. This is just a straight private money loan for, you know, the members of the private money club. This is just a platform to introduce borrowers and lenders. And, you know, anybody can lend their money on a deal like this, as long as you're doing things the right way. All right. Any other questions, or Steve, anything else that you want to bring up or talk about?
No, appreciate your time. Just really enjoy not only working with the group, but I've met several individuals, and each one of them have just been wonderful people. I don't know. There's a jokingly talk about, you know, how rude America has become and how people are just terrible to work with sometimes. And I tell you what, every one of them I've worked with, they've just been great people. So however you screen them, you're doing a great job with the people in the money club.
Yeah, no, it's we love our students and our clients for sure. It's amazing how many people are taking back control of their money and solving their money problems. And it's all them. You know, we just provide the platforms, the education, the training, the resources to make it happen. But at the end of the day, it's people like you, Steve. It's people like the lenders on here that are lending money to people like you that are out there doing the work and making things happen. I mean, it really is beautiful because, I mean, you know, you have all that experience. You know, we talked about 20 years, right? Hundreds of flips under your belt, you know, 5 teams out there working on these deals. I mean, I know your inner workings and what you do as well. So all this stuff goes into making you a successful investor. But what's the one thing that takes you from doing 1 or 2 deals at a time to being able to do all of these deals at the same time? The one thing holding you back is money. So that's what the Private Money Club does. Because how many people are out there that are not like you? They don't have all this experience. They don't have the time to actively go out there and do real estate. They don't have time to manage 5 teams, but they have the money and they understand the value of real estate. Especially in a world like today. I mean, the paper money is just, you know, we're not going to get into that right now, but paper money it's a scary thing right now. And so having hard assets, having stuff that your money is actually invested in that makes sense, things like real estate, at least to me, it's just such a beautiful thing. So that's why I love the Private Money Club. It just allows people like you to meet people that have these policies, have these self-directed IRAs that need to keep that money moving and making more money. And when you do it the right way, mortgages, contracts, the insurance in the right place, you know, everything that covers you and eliminates all the risk involved with it. You know, it's amazing what can happen. So I appreciate people like you, Steve, and all of our lenders on here that are on here and making things happen every single day.
Yeah. Well, thank you so much for your time. If you have any other questions, let me know real quick. Otherwise, I'll mute myself.
Yeah, it looks like we're good, Steve. So yeah, if anybody wants to talk, one-on-one to Steve, just shoot him an email. He can send you over the perfect loan proposal documents, all the comps and all that stuff. And then you guys hop on the phone, chat about it, figure out what works. What do you want to fund? How much money I guarantee you this too, Steve, I'm putting you on the spot here, but if you call Steve and you tell him what you have, I guarantee he'll find a way to put your money to work. If you want to work with Steve, maybe you don't match up exactly on this or this. I bet you Steve will find something that'll work for you. What do you think, Steve?
It's funny you say that. I spent 10 years as a financial advisor, and I'm always doing jigsaw puzzles, and that's just like the perfect combination of the two. How do we put this puzzle together to make it work?
All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Click that alert button, actually smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.